to Friday's edition of Inside India. I'm Sri Jegarajah. Your headlines. President Trump takes aim at Tim Cook, saying he does not want Apple to build its products in India. President Trump also claiming that India has offered the United States a no-tariff deal, but India's foreign minister says any agreement has to be mutually beneficial as Commerce Minister Piyush Goyal heads to Washington for further talks. This as India also pushes on to do a free trade deal with the European Union. Those negotiations are due to wrap up today. As we round off the week, let's take a look at the picture in the APAC markets. Broadly negative, some pockets of resilience in Australia on the Kospi and the TAIEX, but just flat for those two markets for Korea's benchmark and Taiwan's benchmark. Elsewhere, it is red, and the most pronounced losses are being felt on the Hang Seng index, down by just under 1%. Indian markets join us in about 45 minutes' time. Here's what Gift Nifty futures are predicting. 25,188 is where we are likely to kick off. So we are looking at an incline of about 100 plus points. So not too bad for India. The markets there cheering comments made by President Trump yesterday during his visit to Doha. Trump said India has offered the United States a no-tariff deal.
It's very hard to sell into India. And they've offered us a deal where basically they're willing to literally charge us no tariff.
This comes as an Indian delegation is heading to the US today to start trade negotiations from tomorrow. We also heard from India's Foreign Minister S. Jaishankar after Trump's remarks. Jaishankar saying any trade deal has to be mutually beneficial.
Between India and US, trade talks have been going on, negotiations have been going on. In fact, we have, I think a team is just going at this point. These are very complicated negotiations. They are very intricate. Nothing is decided till everything is. But any trade deal has to be mutually beneficial. Any trade deal has to work for both the countries. And I think that would be our expectation from the trade deal. And until that is done, I think any judgment on it would be premature.
President Trump also expressing his dissatisfaction to Apple CEO Tim Cook on their India plans. Apple aims to make most of its iPhones sold in the United States at factories in India by the end of 2026. That's to avoid higher US tariffs on Chinese goods. But Trump is not happy about that move.
I had a little problem with Tim Cook yesterday. I said to him, Tim, you're my friend. I treated you very good. You're coming in with $500 billion, but now I hear you're building all over India. I don't want you building in India.
India is also aiming to close trade talks with the European Union. The first phase in an 11th round of negotiations for a free trade deal ends today. The two sides are looking to conclude a deal in two phases by the end of the year as the US tariff threat still looms. On the macro front, India's April trade deficit widened to its highest levels in 5 months, the gap standing at around $26 billion as imports dwarfed exports, this as its oil imports rose. India, of course, is a net oil importer, and those numbers could grow further, going by OPEC's recent outlook, which suggested a further rise in demand from India. OPEC expects India's oil demand to surge 3.4% this year. That's double its forecast for China and fastest among the major economies. In the meantime, India released unemployment data. The latest numbers suggest the rate of unemployment in April stood at 5.1% for the workforce above the age of 15 years. More men were unemployed last month compared to women. Joblessness was higher in the urban areas than in rural parts of the country. This is the first set of monthly labour data released by India, which will now be a regular feature. Earlier, the data was released quarterly and annually. Let's get more on India's macro outlook and the challenges and the opportunities. Bring in Sanjeev Sanyal now, member of the Indian Prime Minister's Economic Advisory Council. Sanjeev, great to have you on the programme on Inside India. Can we start with the trade picture? Samir Kabadia this week was talking about Prime Minister Modi closing in on a triple crown moment, concluding trade deals with the UK, EU and the US. The UK is more or less in the bag. But President Trump's comments recently that you heard there about Apple not building products in India, is that throwing some shade on a bilateral with the US and future FDI commitments?
Not at all. I mean, we are quite confident that we will have some sort of a trade deal with the US in the very near future. So all of these things will not matter very much. As you heard President Trump mention, we are in advanced talks for a free trade agreement, no tariffs on both sides. And so, and we have already concluded one with the UK just a couple of weeks ago. And as you yourself mentioned, that we are now in advanced talks of doing something with the European Union. So really, we are opening up our market in a very big way. But of course, as our Minister of External Affairs mentioned, it has to be done in a mutually advantageous way.
Sanjeev, do you think that the US and India are heading then for a zero tariff structure?
Yes, I think as I said, we are in advanced talks. This has been going on for some time. So it's not like I have, we have just come to this point suddenly. And I think both sides are very keen on this. It works in various ways. I think there are some small niggling issues. I'm so sure they'll be sorted out in the next few months.
Sanjeev, let's talk about that. Do you feel that agriculture could be one of those issues and challenges, especially if India agrees to US demand to take tariffs to zero? Agriculture is,
so
you and I know, is highly contentious.
See, FTAs are always done within a certain set of rules. There's not like, so agriculture tends to be tricky in every country. It's not just with India. I'm sure when Europe and US have a conversation, they will also have the same conversation. Agriculture is always a tricky issue in every negotiation, as it will be in ours. So that's not surprising, but there are ways of getting around it. So let me not preclude how this is going to progress.
Do you feel, though, on balance, that this is going to be a deal that is good for Indian farmers, balancing out the US issues in terms of market access?
Yes, it will be good for us. We will, as I said, make sure that it works for us. We will look at what is on the table for India as an economy and what are the trade-offs we have made. It's something we will look at. But on balance, the idea is that India will gain access to a very large market. And, do remember, you showed us all those trade data, but actually the real trade data is where India's services exports are. So, in fact, when you talk about India's exports, bulk of it is actually in services, which is not included in the numbers you had shared earlier. Yes. And therefore, really, that is another major area that we intend to expand into. Of course, services is not a part of this whole debate about tariffs, but nevertheless, if we have an economy that is well integrated into the North Atlantic economic universe, then obviously our services too will gain an advantage.
Sanjeev, so ultimately, and let's just bookend this conversation on US-India BTA, do you think that we will see a deal by Diwali around mid to late October?
I think the idea is to do it, this year. I think we are well on our way of making progress in that direction. So I think, whether Diwali or not, I can't say, but yes, we will have some sort of a deal, I think, by the end of this year.
And Sanjeev, it's interesting how Indian trade negotiators haven't been sitting still throughout this tariff global tension. They've been looking at trade deals with the US, with the UK, with the EU, and of course the GCC too. We have Oman in the bag. How does that serve to really consolidate what has been a very vibrant, a very active GCC India corridor, economic corridor?
So we have had, a relationship with the GCC world for thousands of years. So it's not a new thing. There have been for a long time, literally millions of Indians who live in that part of the world. They work there. We trade with them. And of course, we import oil from them. So India is not an oil-rich country, so we import a lot of oil from them. So this relationship is a rich relationship, and we have had free trade agreements with the UAE, for example, for some time. Now something moving forward with the Oman. So we are, as you can see, for all the accusations that are made about us being a high tariff country, we are usually quite keen on opening up our markets and trading. But it must be done under circumstances where all parties are happy. The problem is that we would have preferred to do it under a generalized system under WTO. Unfortunately, the WTO itself has kind of broken down. So as a result of which we have to do this bilateral kind of system. We are not the only country doing this. The US itself is doing this with other countries. So I think, if this is how we're going to progress forward in global trade, then that's how we're going to do it.
Sanjeev, how soon do you think India and the European Union could finalise a trade deal, and what's at stake there?
So this is, as you heard, this is just phase one. So whatever the negotiations are quite limited at this juncture. But I'm not privy to what has been finally agreed upon in this phase, so I can't really comment. But I think we will see something happening even with the European Union in the next 12 months, which I think many people had not been expecting this one. So while a lot of discussion has happened with the UK, with the US, I think the India-EU talks moving forward were not something many people would have anticipated. But as you can see, even here we are making progress.
Yes. So Sanjeev, if we wrap it all up, at what point do you think all these trade deals, with their intentions and with the market access, which you would imagine would be very beneficial for the respective economies, at what point are they going to be material? At what point does India really wake up to an FDI boom, if you will, if Apple, notwithstanding what President Trump has said, if does that become material and real?
So obviously, as soon as the deal is done, it becomes material as far as doing business is concerned. But in terms of changing the global supply chains, it'll take a few years. But I guess it doesn't take that much time as either. I mean, I think by 2030, what is likely, you will have a somewhat different network of global supply chains, and India intends to be very much a part of that. We already are a very important part of the global services supply chains, where people don't talk about this. We are probably right up there with the US in terms of services supply chains. But in terms of manufacturing and goods supply chains, we have obviously been nowhere near, for example, what China does. But the idea is that in the next 5 years, we become a very important part of that supply chain. And you can see we are putting in a big effort into all kinds of things, whether it is electronics or people now look at other areas like metals and materials and capital goods and engineering goods. All of these areas are where we do want to become a part of. Even if the United States wants to re-industrialize itself, it will need to get inputs from other places. Nobody in the world will be competitive trying to do everything. So in that environment, we do want to be a part of those countries that provide inputs into the re-industrialization of the US, if that's what it wants to.
Sanjeev, you just mentioned China, and it's interesting, isn't it, that yesterday we were having a conversation with IDC, and the top-selling phones in India are Vivo, Oppo, and Xiaomi. Does that tell you that Indian consumers are agnostic? Or do you feel that even closer relationships and closer economic ties with China and India, long-term rivals, are not off the table? We've been hearing a lot about Chindia. We've been hearing a lot about the dragon dancing with the elephant. What do you think?
So we trade with China. We have very close trading relationships. In fact, in terms of our imports of goods, In fact, China is our single largest source. So it is not that we don't trade with China. And indeed, we intend to continue doing so. And, you may have also seen that a lot of Chinese companies are coming to India and setting up shop as well. So this is something that will continue. There is no reason why we cannot both compete and collaborate with China at the same time. And that, I think, is what you will expect will happen. So just because we are integrating more closely with the Western economies does not at all mean that we will not be having an economic relationship with China. We will continue to have an economic relationship with them. In fact, in many areas, there are many areas where there is a domestic market in India and in China, and there are goods that we intend to supply into each other's markets which have nothing to do with the North Atlantic.
Thank you for that, Sanjeev. Let's take a closer look at the domestic economic metrics and the outlook. Latest data suggested a rate of unemployment in April stood at 5.1% for the workforce above the age of 15 years. This really touches on the issue of youth unemployment. How acute is this problem, and what's being done by the centre to address it?
So in the end, the most important thing about generating jobs is really about having growth going on a sustained basis. So we have obviously a very large population, and we also have a youth bulge. So, there is suddenly a large number of people for whom jobs need to be created. You can do all kinds of things on the side, but ultimately the single biggest source of jobs is just growth, which relates to all these free trade agreements that we are also talking about. We want to deploy our labor force, young as it is, and increasingly more skilled, into being able to supply all kinds of goods and products and services into the global market. That's the only way we can really take advantage of it. Of course, there are many domestic things we can use them for as well. And so maintaining high growth rates is an absolute priority. Now, in this context, let me say that for several years now, we have had reasonably high growth rates. We have been the fastest growing economy of any scale. And we will continue to be for some time, as per the reckoning of virtually every major IMF, World Bank, or any multilateral that you may be asking. So,
Sanjeev,
first thing here, this requires two things: that we don't lose our heads about trying to force growth at any one point in time. So we have been very careful. We have been sustained bringing down our fiscal deficit. We have actually kept our monetary policy very tight. Although we are easing it, but we are doing it in a very structured, slow way. So keeping this growth momentum going so that the compounding process can play itself out is important for us. And so whether the free trade agreement or a rather careful approach to COVID management, if you will remember there, is really aimed ultimately and allowing this compounding process of growth to play itself out.
And public sector capex programs are going to continue, are they, Sanjeev, to be a big part of keeping growth ticking along, headline growth ticking along at around 6.5%, are they?
Yes. In fact, we intend that if inflation, which is coming off very quickly, and if there is no too much turbulence externally, we have the ability to push this growth back above 7% quite easily. As I said, we have actually been very, very conservative on both the fiscal and monetary front because of all the turbulence in the world. But now, as you can see, inflation is coming off. India's inflation is now around about 3%, which is below the 4% target and is still falling. So, in fact, creating space for significant reductions in interest rates and easing of monetary policy, but also allowing for us to push other forms of growth if wherever possible. So, growing over 7% may become again possible in the next year or two, which has not been possible in the last year. We had to keep things tight because of inflation, but as you can see, inflation's come up very, very sharply. In fact, much more so than what your chart shows.
Sanjeev, can I bring in these destabilising and devastating for everyone recent flare-ups between India and Pakistan? Do you feel that the upshot to all of this is increased defence spending for India? And if that is the case, then how much pressure does that put on everything that you talked about and fiscal consolidation and discipline?
Obviously, a very long and bloody conflict is in nobody's interest. But a small, series of few weeks of what we just saw, this doesn't really cause too much problems for India. It's a large country with large resources. Having some sort of a skirmish with our Western neighbor is annoying, but I don't think it causes great amount of turbulence to our own economy, unless this goes into something much more complicated than what it has been so far. So far, I don't think this has had any great economic implications. Our government's purpose is to send a message to Pakistan on terrorism-related issues. It is not to keep this bubbling for any length of time. So let's see how this plays out. But as I said, our Prime Minister has been quite clear that our purpose is to simply send a message to Pakistan that cross-border terrorism is something we don't tolerate.
Sanjeev, the next stage in India's economic evolution is to move up the ladder on advanced manufacturing and ultimately India to join the ranks of global chip powerhouses. That's just one aspiration. Where is India on that transition and what are the challenges involved in this way forward?
So obviously, we want to move up the value chain. Ironically, India is actually good at certain areas of high-tech manufacturing, including defense, as we have just demonstrated, but also in things like pharmaceuticals, Apple phones. But the fact of the matter is that, take chips, for example. In the case of chips, India is actually one of the most important places in the world for chip design. Many of the major chip companies in the world design their chips in India. But we don't used to manufacture any. Now, this is somewhat of an issue because you see, especially during COVID, we saw how once you have some sort of a disruption somewhere in the world, it can come sort of cascading down to us. For example, we are a major manufacturer of automobiles, and we could manufacture everything in the automobile except the few 2-3 chips, and then the car is useless without those chips. So we have in the recent years given a lot of incentives for chip manufacturers to produce in India. We've had some success. Many of those plants are going to be on stream later this year or early next year. So that is the idea. We don't think we'll become replacing other chip manufacturers around the world, but we do want to have some capacity on our own, such that when there are disruptions, we can use our own facilities. And yes, in some segments, we may be quite big as well. So.
And that's central to the PLI schemes and the entire Make in India programme. Sanjeev, we've got to leave it there, sir. Thank you very much indeed for joining me with your insights. Sanjeev Sanyal there from the Indian Prime Minister's Economic Advisory Council. We're back in 2 minutes. Welcome back. The APEC Trade Ministers meeting wraps up today, and Lin's been keeping track of all the action on the ground in Jeju. Hello, Lin.
Good morning to you, Sri. Well, one of the things that we are focused on is the fact that USTR Jameson Greer is here, and many of these export-reliant Asian economies are trying to strike a deal with the US before the 90-day pause ends in early July. Now, in terms of the developments on the US-China front, of course, we had those Geneva talks. We saw that significant de-escalation and also the talk of a mechanism to keep talking. Now, we know that the top trade representatives from both countries, they are here. They met on the sidelines as well. And I asked both representatives on their way out of the building how those talks went. I did get a response from the Chinese. Let's watch.
Minister, how did the talks go with your US counterpart?
Good talks.
Good talks, constructive? Do you think you've been able to move forward now?
So that was Minister Lee Chang-gung saying that those talks were good and were very constructive for a trade representative that just came into that position about a month ago. Certainly a tall task ahead, although he does have a reputation for being a very seasoned campaigner in trade circles. Of course, the attention now turns to whether or not we will get that joint statement later this afternoon. We're already hearing on the ground that whilst delegates are working very hard towards that it's not a certainty given some of the divisions. Sri.
Lin, that was a masterclass in what we call in the business doorstepping. Great work getting that minister there. We appreciate it. We'll have more on alternative investing after this break. We'll take a closer look at private credit markets and the outlook in India. Welcome back to Inside India. President Trump met Reliance boss and billionaire Mukesh Ambani at the state dinner in Doha. Remember, Ambani was also present at Trump's inauguration in January. President Trump wrapping up his visit to Qatar and is now in the United Arab Emirates. CNBC's Dan Murphy has been tracking the developments and filed this report.
President Donald Trump has touched down in the UAE, the final leg of his three-nation Gulf tour. He's the first sitting US president to visit Abu Dhabi since 2008, the last being President George W. Bush some 17 years ago. Fast forward to 2025 and Trump arrived to a grand reception, escorted by UAE fighter jets and a personal greeting from UAE President Sheikh Mohammed bin Zayed, as well as other senior Emiratis. Once on the ground, the president also visited the iconic Sheikh Zayed Grand Mosque alongside the Crown Prince of Abu Dhabi. His visit here reflecting a broader shift towards deeper economic, business and policy engagement with regional allies after flying stops in Saudi Arabia and Qatar.
We are going to be your friend and we're going to be your partner, and we really appreciate your confidence and an investment. That's your biggest investment that you've ever made, and we really appreciate it, and we're going to treat you very, as you should be, magnificently.
The stage is now set for 2 days of high-stakes diplomacy and big business. The UAE has already pledged a $1.4 trillion investment in the US economy over the next decade, focusing on AI infrastructure, semiconductors, energy and manufacturing. Now, work is underway to secure more advanced AI chips, part of the UAE push to become a regional and global AI hub. The optics of President Trump's visit have been strong. The deal flow even stronger, but key foreign policy issues remain unresolved. Israel, unmentioned. The war in Gaza, unresolved. And the Iran nuclear deal, still hanging in the balance. In Abu Dhabi, Dan Murphy, CNBC.
In the meantime, India has revoked security clearance for Salebi Airport Services India. The company is a unit of Turkey-based Salebi. New Delhi has cited national security as the reason behind the decision, and this comes amid a backlash in India against Turkey for siding with Islamabad during the recent military conflict between India and Pakistan. But the operator of Delhi's international airport, GMR Airports, saying just a few minutes ago it will allow Salebi to continue operating its existing cargo terminals. India, meanwhile, has also called for the International Atomic Energy Agency to take oversight of Pakistan's nuclear weapons.
Are nuclear weapons safe in the hands of such an irresponsible and rogue nation? I would like to raise this question in front of the entire world. I believe that Pakistan's nuclear weapons should be taken under the supervision of the IAEA. I would like to make this clear.
Let's bring it back to markets, and we are counting down to the open in India. This is how we are shaping up. Let's give you a glimpse of the futures picture. GIFT Nifty futures giving us an implied open in the region of 25,186. So that would represent upside for about 100 plus points. Dollar rupee exchange rate sitting at 85.3740. Now, let's, as promised, do a deeper dive into private credit markets in India. Bring in Saurabh Tripathi, CIO, private credit at Kotak Mahindra AMC. They have just closed a raise of over $141 million for their maiden alternative investment fund. Saurabh, welcome to Inside India. First of all, the broad picture, and how would you characterize the macroeconomic outlook, the risks and opportunities as they apply to private credit markets in India?
Thanks, Sri. Thanks for having us. And I think you are absolutely right. There has been an evolution of private credit across geographies. India is no different. We have identified macro and micro factors, and over a period of time, India has been moving towards assimilating opportunities which have been coming out from maybe guardrails which have come around of regulators. There have been evolution of businesses which have come together. And over a period of time, there have been these opportunities somebody need to provide a solution for. So that is where the crux of private credit market has always been. India, as I mentioned, is not immune to these developments. Over a period of time, the growth in Indian economy, and over a period of time, which is 75 years back, if you go back to that era, from 75 years to today, there has been a good growth which we have achieved. I think the GDP numbers, the economy growth is testament to that fact. But once you squeeze it, even for the last 10 years, it is a fantastic growth story. And if you even skews this between another 5 to 3 years, it is actually a tremendous story that we have reached. Now, while there is a growth in economy, there is a momentum which has been developed, there will always be macro factors which will come in. So we do see the evolution of macro factors, and we identify them based on our domestic demands. But to be precise, we have a great demographic dividend, which we have achieved over a period of time.
Yes.
Now there is a time where we actually identified this period to be present, providing solutions, not only solutions to businessmen who are there to identify requirements of our internal economic situations. And these are in most of the cases independent of what is happening globally. While there will always be global factors which will influence, but if you see the rate scenarios, if you see the demand which have been coming, I think India has been at a sweet spot. And in this sweet spot, solutions are requirements which are non-dilutive in nature. There are solutions which are for investors who have evolved and are discerning over a period of time. And in the last 4 to 5 years, we have seen enough and more demand coming from domestic investors, which are HNIs, family offices, and that too insurance agencies and institutions, which have looked very actively into sector of private credit.
Saurabh, so is the cyclical growth trend of in and around 6% enough to really generate real returns for private credit investors?
Sri, this is an interesting point that you have raised. When we look into this market, return on capital employed between 18 to 24% is typically how a credit market investor will look into. And somebody beyond 18% is really a solution akin to equity. Something below 18% is something which is a solution being non-dilutive in nature. A 6% at an overall perspective make perspective grow for economy, but there will always be spaces in the economy which will go beyond the anticipated 6 to 7%, and these will be really non-traditional ways of growth. So it will be acquisition financing, it will be probably reorganization of capital structures of company. There could be situations where we have seen businesses coming out from this old thought process of maintaining a maybe a few $1 million size and profitability to grow to a certain scale. So as I mentioned earlier, demand is paramount. And once the demand is paramount, there is always requirement of specialized credit. So 6% growth on the economy definitely is positive. But on top of this, there will be sectors specifically where we will find growth parameters which are required for people like us entering into the space and providing return to the investors.
Thank you, Saurabh, for raising that. And that segues perfectly to my next question about the sectoral opportunities that are perhaps unlocked by the Digital India government initiatives like UPI, DigiLocker e-hospitals. We were talking about this yesterday with a guest. So how much of a driver for private credit markets are these government-backed initiatives and vehicles, in fact, like India's National Investment and Infrastructure Fund, also backed by global investors like Abu Dhabi Investment Authority, planning to raise up to $2 billion for its latest private credit fund. Do we look to, or do private credit investors look to government initiatives to really unlock value and opportunities?
Absolutely, Sri. I think this is important because this is actually a same pot where everybody is operating. While policy making gives a vision, and once you are aligned with the vision, you have a perspective. In that thought process, we have always been looking up to how the policies are shaping up, how things are evolving, and not only us, you think about the businessmen who actually, or maybe entrepreneurs, could be first generation, could be a third generation entrepreneur whose family office or his generations now really want to venture into new initiatives. Now, those are all driven by policy making. Now, once the policy making is visibly potent and there is a visible upside which actually comes out from a vision which is stable, those two are key pillars for any growth in any type of market. Now, private credit is, again, no stranger to these type of growth. And not only this, you would have sitting at your offices, you have definitely seen a lot of money flowing towards India. The size of India's private credit market have enhanced. Now, not only it has enhanced, the type of market have even evolved. There was in global arena, if you would have seen, there have been many verticals of private credit market where India has been seeing this growth over a period of last 4 to 5 years only. Now, in these 4 to 5 years, we have actually identified not only sectors which are into venture capital debts, which are early stage investments. There could be a dilutive investment, which could be probably a private credit, which in a special situation. But there is also a large market which has grown, which is on the performing credit. Now, these are those sectors and those investments which are below 18%. And we have actually identified policymakers to get into sectors and companies which really solve for profit making with a certain upside. Now, in that context, government policies are important, businessmen's endeavors are important, and then there is someone who has to provide solution. So if you club all these three dimensions, we will identify a play where it is win-win situation for all the three, the government and the economy, the investors, as well as the players like us.
Saurabh, 163 deals last year. Private credit investments in India reached $9.2 billion. That's according to a recent EY report. So is there upside to those figures? And can you personally paint an outlook on what the future holds?
So the way we actually look into this, there has been guardrails across the globe which has come from regulators. Because there has been an identified vision of segregating the way our public money will be managed against our private capital. Now, in that context, we have identified there are enough and more opportunities which are coming, and that too in an economy which is growing at a fast pace. The way we look into this, $60 to $70 billion opportunity in next 3 to 5 years is where private credit looks for. Now, private credit in one sense is the broader umbrella, and there is, I think, the potential of growth for performing credit is even sharper. So that is where we see around $10 billion, as you rightly mentioned, is where the market has been. But if you see the broader context of how the market globally is, it's closer to $3 trillion market. And it was actually a few $1 million markets if you go back 30 years. So I think the journey is always based on regulators' perspective, challenges in the market, provides opportunity, and then vision of policymakers. Yes. So this is actually a right time for people coming into India. People actually looking from a perspective of return. I understand that dollar return and INR return always brings a separate perspectives, but at the end of the day, there is a comfort of underwriting. There is a comfort of people who have boots on the ground in India, and we have seen enough and more demand coming towards India. You would agree, the likes of global funds, now they have their different sleeves which are focused on Asia Pacific. There are sleeves which are focused on Asia, yes, and a large chunk of those monies are identified towards India as an opportunity.
Saurabh, you mentioned performing credit and how that's very interesting, very active, but EY cautioned that there is intensifying competition in this space that could make deal execution more challenging and it could lead to more aggressive lending terms. Is there something akin to a price war brewing in that space, and how are you managing that?
This is a very, very interesting question. We did had a discussion with EY itself, and I think it's an important point to ponder. There will always be a demand and supply equations which will form and shape the market. But when we talk about the ability of an investment manager to manage a certain type of asset into a certain manner, so there is a process of sourcing of a transaction, there is a process of diligence, there is a process of underwriting, and then there is a process of monitoring. Now, this is a large process-oriented approach that anybody have to employ. Now, the good part is investors are quite discerning. They understand, first of all, how the market is evolving, and they understand to be with people who have the ecosystem built around. So people like us, for example, have been into an ecosystem which is into financial market for a large space and cover a lot of opportunities. So that is one. The second part is, when we actually look into the point of price war or maybe the transaction sourcing, the ecosystem definitely helps. It also is important that most of the shops on the street are not really large shops. So there is a club approach of players who have evolved, and that though provide the importance of people being in the market, but not necessarily they are able to get a large transaction in play. So the size which we are going to operate, the size of transactions that we are looking to do, I think that is something which will be able to solve the challenges of price war and sourcing. So while you are absolutely right on this.
Thank you for that, Saurabh. Where are you putting asset quality of the underlying asset here? And where are you putting, therefore, potential default risk when you consider especially the proliferation of household debt in India, warnings of a middle-class debt crisis? Is this an issue for private credit markets, and how exposed to the consumer are they? And are credit spreads issuing Any kind of warning signs at this stage?
Sure. The markets have gone into a bit of frenzy with respect to, if you rightly pointed out, transactions has to be done by players who have raised money. But because the size of money has been raised are smaller in most of the cases, they go for smaller transactions. And once you go for smaller transactions, ability to control the business's cash flow, identify cash flow, and be part on maybe multiple governance structures become a slight bit of difficulty. Now, that is where we have identified a sweet spot for us. It has to be, as I mentioned earlier, performing credit is the one which has to evolve quickly and has the sharpest growth perspective. Now, the identification of a performing credit is based on assessment, based on cash flow. Now, if you identify a cash flow, naturally there is a visibility of sizing of debt based on cash flow. At the end, you also want to monitor cash flow. So practically, that is really the guardrail for us. Now, if you see the same process in how other smaller transactions come in, there will be challenges where you may not have control of the end use. There could be challenges where there will be development of multiple end uses, which is linked to growth of sectors which are really new to the economy. Now, that is where it is very important for people to identify the type of money and solution that they are going to provide. As I mentioned,
yes,
dilutive capital may be the solution to it. A non-dilutive capital is a solution to a performing or a cash flow based lending. So that is where the market has to identify. My sense and the talk with my peers have actually, I can conclude there has been a maybe effort that has been taken by peers working to that side of maybe business.
Saurabh, on the flip side, some optimists believe that India may be in line for a sovereign credit ratings upgrade. Morningstar DBRS has recently raised the bar to BBB with a stable outlook. Could the global ratings agencies follow? And are credit spreads in the private market pricing in this eventuality?
So this is a very important question, and I think I always like to ask this question to everyone, because if you see, there was a time post maybe COVID, we had a situation of high liquidity, and the spread in credit markets, at least where we operate, were hovering between 13 to 15%. Now, that was a low liquidity, low interest rate regime. Post that, we are actually at a different landscape. And in this landscape, the yields in a performing credit sectors are not going beyond the roof. They're not crossing 18%. They're around 14, 16, 18%. So that is where the market is. So while liquidity and probably the rate regime is one perspective, the overall perspective of India's sovereign rating getting upgraded also will have its impact. But do we see a large impact in a short span of time? The answer is no. Do we see that this will have an impact on growth of business? The answer is yes, because there will be a lot of money which has to be coming to India, and an upgrade in credit rating enhances that thought process within the global investors. So we see this happening and bringing a very positive output to an economy like us.
Saurabh, fascinating conversation, sir. Thank you very much indeed for walking us through all the intricacies of the private credit markets in India and the opportunities and the challenges. Saurabh Tripali there, Kotak Mahindra, AMC. Indian markets have joined the trading day. We'll take a closer look at some of the movers in Mumbai after the break. Right, we're about 5 minutes into the Indian market session, and the benchmark Nifty 50 really just bimbling around this level of 25,000. Let's give you the dollar-rupee exchange rate while we're at it, 85.4020. And it's home stretch for the earnings season in India. Take a look at shares of JSW Energy, the stock up by almost 1%. Indian Power Company posting a 16% jump in quarterly net profit backed by strong power demand and rising heat conditions in the country. Earnings also out from Singapore Airlines. JP Ong is here with the report card for SIA.
And it's the full fiscal year report card for SIA, and they're seeing divergence, at least with regards to their profit trends. First off, the bottom line did show that profits for overall grew by about 4% during that time to another record of about 2.78 billion Singapore dollars. On the other hand, though, you'll notice here, Sri, that a lot of this was driven by one-off gains based on the merger of Air India with the former affiliate of Singapore Airlines, Vistara. This resulted in a one-off gain of about 1.1 billion Singapore dollars. If you strip that out, actually, you'll see that operating profits for Singapore Airlines actually plunged by a whopping 37%, and just points to, again, to the fact that it's getting more expensive to run an airline in this day and age. You'll notice here, based on the cost breakdown for Singapore Airlines, revenues grew by almost 3% during that time, so slower than usual, but again, growth nonetheless. You'll notice that their net fuel costs and fuel hedging actually fell for that time, so they're managing their fuel costs a lot better. Non-fuel expenditures, such as handling charges, passenger costs, rose by a whopping 11%, which resulted in that operating profit actually declining. So that might be something that Singapore Airlines will have to address, actually, how they're going to manage their operating profits and costs in this very tough and challenging condition, Sri.
And tell us, moving forward, ultimately, what kind of airline is Air India going to look like after this restructuring and merger going forward? Well,
you know, there are opportunities actually here, and something that perhaps Singapore Airlines saw as being very lucrative. Post-merger, they are going to retain a 25.1% stake actually in Air India, and it's a bit of a win. Plus, there are wins for, I guess, benefits on both sides. For Singapore Airlines, it's really tapping into the lucrative aviation market in India. Now, they are a distant third in terms of domestic passenger travel in the world, actually. But again, you'll notice here that in India, they saw about almost 200 million seats actually flying in 2024, third in the world, as we mentioned, and continues to show strong growth. But that domestic market, which is the name of the game now in India, is becoming harder to crack because Indigo still has commanding near 50% share. So merging Air India with Vistara will mean they are in a better place to compete for this particular segment, and also it gives Air India a chance to tap into Singapore Airlines' own expertise in international travel. So you'll see that Air India will benefit in terms of the expertise of Singapore Airlines, and also we're seeing that at least SIA will be given a chance to more efficiently tap into that growing but very competitive domestic market in India. So win-win for both sides, actually, and we'll see just how quickly and if this will result in a better cooperation or working relationship with these two big airlines at the moment.
There is a lot of interest in the India GCC economic corridor. Now that India has a trade deal with Oman, that corridor just looks set to become even more active, and Air India Vistara perfectly positioned to tap that market.
They're going to need a lot of flights if they're going to be signing a lot of deals, Sri.
Exactly. JP, excellent. Thank you very much indeed for that. Right, little PSA before we end the programme. Now you can tune into Inside India while you're on the go. Catch our live stream on YouTube worldwide. We are live every weekday at the times on your screen. And you can even see a picture of me. There you go. Right, that's all the time that we have today on Inside India. Do keep watching CNBC. Dan Murphy is up next with Access Middle East.